Hi, I'm Jessica Amir for the Finance News Network. Joining me now from Boom Logistics is MD and CEO Brenden Mitchell. Hi Brenden, and welcome to the network.
Thank you, Jessica.
So first up, for those investors new to the company, could you give us an introduction?
Boom Logistics is an industrial services group that supplies integrated lifting solutions to Australian industry. It involves specialised equipment, skilled labour, engineering expertise and a broad range of labour services to Australian industry. We were listed in 2003 on the Australian Stock Exchange. We employ around 1,000 people across Australia. We have a fleet of 300 cranes up to 750 tonne in capacity and 200 travel towers with reach up to 70 metres and all the ancillary equipment required to deliver on those services.
Brenden, you spoke about the key new exciting markets. Maybe you can tell us about your strategy and what your time frame is.
The last 2 or 3 years has been about transforming our business to be more cost effective and flexible to meet our customer requirements. That strategy is having an effect right now. That's evidenced by the winning of work in mining services and winning of the travel tower work. In addition to that, the Ready business, which has only recently been established, has delivered $8.5 million worth of revenue in the first 4 months of the financial year and positive earnings. But importantly, it's also delivered real cost improvements to our Boom Logistics business, enabling that business to be more competitive in serving its mining customers in particular.
And Brenden, can you tell us about the key areas that you operate in and what you're really focused on?
In the last financial year, we had 54% of our business came from, or revenue came from, mining and resources, 17% came from infrastructure and construction, 14% from telecoms and other utilities, and 13% from industrial maintenance. As far as the revenue breakup goes, we had 80% coming from the eastern states, including South Australia, and 20% coming from WA. When we look at where we're actually working, and we're working in the Bowen Basin in coal, the Hunter Valley in coal, we're in Victoria, regional Victoria, supporting the power utilities, Olympic Dam in South Australia, and we're serving alumina and gold in southwest WA. Our travel towers service the telecommunication and energy sectors all throughout Australia, and we take our major assets for infrastructure wherever they're required. And Ready, our labour hire business, operates in the same markets as our mining services business, mainly because we understand the safety, quality and assurance practices those customers need.
So you've got quite a lot of big names under your belt. Maybe you can tell us about your FY17 results. What were the key highlights?
I think the first key highlight was the improvement of the second half over the first half against the seasonal trend, reflecting the considerable work we've done to transform our business in the period. I think secondly was the $20 million of revenue growth we achieved in the wind farm market. That's critical for us going forward. That'll all be in this FY18 year. Thirdly was the establishment of our Ready labour hire company. Now this business is only recently established. It's delivered $8.5 million in the first 4 months of the financial year from internal and external sources, and it's delivered profit in its own right of $500,000. So going forward, this is going to be a critical business both to grow revenue without capital and at the same time giving our own business more flexibility to meet our customer requirements. And not to be understated would be the safety performance of the business. We've been bringing more people into the business, we've been serving our customers and growing our revenue, and whilst we've been doing that, we've been able to improve our safety performance, which is a credit to the frontline managers on the ground delivering every day.
And just closing, Brenden, what can investors expect out of news flow over the next 6 to 12 months and beyond?
Well, what our investors should be looking for, firstly, is our half-year results, to see how that compares with the first 4 months of the financial year, which we've talked about. Then if we look at just how much that result is over and above the prior corresponding period, that's a good indicator to our investors as whether we're on the right track or not. Secondly, we'll be delivering to our shareholders information on revenue growth and contract wins. Because we have a relatively fixed depot infrastructure and overhead base, every dollar of revenue increase delivers a significantly greater proportion in percentage terms of EBITDA. So $1 of revenue might be a 10% increase, well, we'll get a greater than 10% increase in operating performance. If our shareholders are seeing revenue growth, then they have a sense that we're on the right track and we're going to continue to deliver more out of the business and reach our desired returns.
Well, Brenden Mitchell, thank you so much for the introduction.
No, it's a pleasure. Thanks for your time.